Hello, my name's Mark Helm, and if you've thought about looking for a business opportunity to invest in or commercial real estate to invest in, I'm sure self-storage has crossed your mind. It very well could be something that you've thought about before, maybe even a number of years ago, didn't take any action on it, and now you're seeing self-storage going up everywhere and you're wondering, should I have done something in the past, or is it too late for me to invest today? Well, let's talk about that. I think in today's market, in today's world, there are 5 things everybody who's considering investing in self-storage ought to know. The very first thing is that there are very few variables that affect the net operating income of a self-storage facility. So in my opinion, this is one of the best features that self-storage offers over any other type of asset class, retail, office, apartments. Let me share with you what I mean. In the mid-1990s, as a commercial real estate agent, I was in the office business in a very big way for our market. I had a number of investors I worked with. We would buy an office building, reposition the office building. Our company would manage it during that repositioning. We would get the net operating income up, and then we would turn around and sell those for a profit for the investment group. And in terms of office management, we were fairly good. We had an above market, we had better than 80% of our tenants renewed. And when a tenant renewed in the office world back then, we used to budget about $5 a square foot for that renewal. And what that included, very often we had to paint, recarpet, and of course the management company got a renewal fee, and we budgeted $5 a foot to keep that income stream going. Then of the 20% or less that may move out, very often we could spend $20 a square foot if we had to reconfigure the space, if we had, of course we had to pay commissions, and that's just the way investment real estate works. And we had many years where we had a great NOI, income, which is usually rent, minus the operating expenses, the cost of running the building, the taxes, the insurance, the utilities. That leaves the net operating income. And below the net operating income is the debt service, the loan payments, and all the capital expenses like commissions and tenant improvements. And we had years where that net operating income was better than we had even projected to the owners it would be, but yet they had to put money, write checks and put money in the deal because of the amount of capital expenses below the net operating income line. All investment real estate has that. Think about apartments, appliances, carpet, evictions. Think of retail. Even when a tenant moves out, very often we have to spend money to get it back to a vanilla box. And of course there's renewal fees and commissions. And that was the world of commercial real estate I was operating in when I got a call from a REIT, a acquisition director of a self-storage REIT, and we went out and looked at self-storage. And what I saw was basically a steel building with a concrete floor generating incomes that were very close to the Class B office space we were managing in our market. It was very close to what apartments were getting at that time in our market. We were getting $850 to $950 a square foot for non-climate control space, in other words, concrete floor and steel wall, and $11 to $12 a square foot for climate controlled self-storage. But what I saw was there was no carpet to replace, there were no tenant improvements. If the tenant didn't sweep the unit out when they left, we would charge them to clean the unit. And if they didn't pay, there was no eviction. We did not have a landlord-tenant relation. What I saw was that you could auction the goods that they were storing, and it was like a 20 cent on the dollar insurance policy on your cash flow. The few capital expenses that these REITs had, they could budget very simply for them with a 10 cent or 12 cent per year reserve fund. That's a big difference from $5 a square foot or $20 a square foot. That's when I saw the benefit of owning self-storage, that there's so few variables on the net operating income. So as an investor in self-storage, that's a real benefit to know about and compare it with other investments. And in today's world, that benefit is just as real as it was in the 1990s. The second thing I think you should know as an investor considering self-storage is that it tends to be recession resistant. It's not recession proof, but it is recession resistant. In other words, during the last recession we had, the average storage facility lost 6% of its occupancy. Now, 6% is 6%, but compare that to retail, which was hammered hard. Office, in many markets, office still hasn't recovered. Even apartments during the recession were affected. Now, there's nothing that guarantees future recessions will have storage function at the level it did in the last recession. But if you think about it, the recession itself created much of the demand for self-storage during that time period. The average self-storage customer is someone who's in transition. Good times create transitions, and challenging times create transitions. On average, about 20% of self-storage customers are commercial customers. They run their own business and they're using the facility to store their products. The benefit of commercial customers are they tend to be long-term customers and well-paying customers. The rest, the other 80%, a large portion of them are people who need storage because some type of transition is occurring in their life, a death in the family, a move from one part of the country to another. And again, in a recession, some people were losing their houses and they needed a place to put their goods. As a practical matter, we spent more energy on the collections than we did in a non-recessionary time. You've got to really keep your eye focused on having the gap between physical occupancy and economic occupancy within 2 to 5%. But all in all, self-storage fared very well in a recessionary time. Now, given where we are in the current expansion and boom and economic cycle, in my opinion, it's just a matter of time before the next recession hits. And it's important to know how storage compares in recessionary times to other investment vehicles. Those are two real positive things to know. The third thing I think you need to know is that it really does require a specialized knowledge to run self-storage. In other words, it's much like building a shopping center or buying a shopping center, then opening the store inside it. Self-storage is a retail play, but it's also an ongoing operating business. And in today's world, this industry is evolving very fast. How the larger institutional players operate their business can be vastly different than how the smaller mom and pops operate their business. In the 90s, when I first entered the industry, I would have told you that really the only innovation in self-storage in the past 30 years was the advent of climate control. Well, that's not the case today. The larger players very often use very sophisticated data algorithm software that will allow them to peer into a submarket and see what the supply demand is, know exactly almost in live time what their competition's doing, and they are making acquisition and operational and pricing decisions based on a lot of data and a lot of information. Now, smaller investors, we do that too. But most smaller investors, at least today, are not inclined to be operating at that level. There's a learning curve and an investment that many of the small players don't want to make at this time. And this is still a very mom and pop industry. The REITs, or the large institutional players, really only account for between 20 and 22% of all the facilities out there. 62% of all self-storage facilities are owned by a person who just owns one facility. It is still a very mom and pop industry. So if you're considering investing and you don't want to be the one running and managing the facility, you want to make sure that who you're investing it with can operate at a higher level than the majority of people who are out there. The gap between how the larger players operate and the smaller players operate is going to continue to grow. And as a smaller investor, it's incumbent upon us to grow with the industry. And you want to make sure that if you're vetting someone to invest with or partner with, that that person is willing and or is operating with the newest type products that the industry offers. If you're considering investing in and running it, make sure that you understand this and are willing to make the money investment and the learning curve required to operate at this new and higher level. The fourth thing I think you should know is that many of the markets, or the submarkets more accurately stated, are overbuilt or are soon to become overbuilt. You've probably noticed all types of construction everywhere, storage going up everywhere. You may even be wondering, is it too late? Well, the self-storage product is a very sub-market oriented product. What I mean by that is the number of storage facilities in, let's say, Atlanta is very interesting, but for the most part, irrelevant. Now, if I'm looking at a facility in Atlanta market, the market area of that facility is critical. What is the supply demand of the market area that that facility or that piece of land I'm considering building on is located? What is that submarket doing? That's critical. Why? Well, in our portfolio, for example, 86% of our customers live within 4 to 5 miles or closer. So you know where your market is. It's real easy to determine the market size, and then it's also real easy to determine how much supply is currently in that submarket. That's part of the data algorithm software I'm talking about. We have the ability to peer into a market using this software and see how many square feet per capita there is. We know the national average. We can find out the average for that market or city or state that that facility is located in. And we get feasibility reports anyway, and most people should. If you're investing with someone, make sure that they do. If you're buying it, make sure you do. And those feasibility reports tend to be pretty accurate because it is a sub-market product. No one's going to drive from North Atlanta to South Atlanta because they think the doors look better. People rent storage where they live and they work. So know that many of the submarkets are becoming overbuilt. Now, that doesn't mean there isn't opportunity out there. I see every day submarkets, even in crowded cities that are, quote, overbuilt, I see submarkets that still have a lot of unmet demand. But it's incumbent upon us to know that we are entering the oversupply portion of the real estate cycle, submarket by submarket. So it's critical that you invest in submarkets that still have unmet demand. And the fifth thing I think every investor ought to know is that at least I don't see any disruptors on the horizon. And I and other people watch very, very closely. What I don't want is self-storage to become the blockbuster of commercial real estate. Pods, when they were introduced, did not disrupt the self-storage business as predicted. In today's world, there's a thing called concierge storage, and it's usually on the coast in the larger markets. That's where the owners will come pick up your goods and basically store them in a warehouse, much like the record storage industry. And they give you an inventory list, and when you want your goods, you call them and they deliver it. Typically, concierge storage is much more capital intensive than self-storage, and it costs the customer a lot more money. What I have seen, even in the larger markets where concierge storage is active, what I've seen is that the self-storage in those markets is growing much faster than concierge storage. In fact, as I video this, I haven't seen one concierge storage company that's profitable yet. And the reason I think is because people want to have control over their stuff. They want to be able to get to their stuff whenever they want to and not have to go through someone to get it. In 2000, about 8% of the population had used self-storage. In 2010, that went up about 2%. I haven't seen the latest stats, but I think it's almost doubled so far this decade. We will see the stats coming in very soon. But self-storage is a fairly young industry, and it's now becoming accepted by the marketplace. So not only is a larger percentage of the population using self-storage, but the population itself is growing. So as I look at the industry, we may not be in our infancy, but we are certainly not adults yet in the industry. It's becoming a sophisticated business, but it's still fairly new in its life cycle. So I see a 10, 15, maybe 20-year horizon where this product ought to do very well, and in the U.S. there will be increasing demand for the product that we offer. And you now have the ability to know the supply and demand in any given submarket for storage, or partner with or invest with people who will be able to determine that. So if you're considering investing in self-storage today, those are the 5 things that I think are important for you to know. 1, that there's less variables on the net operating income than other investment types. 2, self-storage tends to be recession resistant. 3, self-storage is a specialized operating business that requires specialized knowledge. 4, be careful today because many of the submarkets are overbuilt. You can find submarkets where there's unmet demand, but that's our job as investors, is to find those markets. And 5, I don't see any disruptors on the horizon. If I'm coaching someone who's considering investing in self-storage, those are the things I think are important today for the investor to know. Self-storage is, in my opinion, the absolute best investment vehicle there is. It has the lowest foreclosed on rate of any real estate asset class, and people who run self-storage facilities professionally and efficiently are able to project their cash flows or cash flows to the investors with more accuracy than any other type of real estate investment I've seen. Self-storage is the best business in the world for the small investor or for people to invest in, and These are the 5 things I think every investor should know today. Thank you very much. My name is Mark Helm. I'm the author of Creating Wealth Through Self-Storage, and I hope to meet you someday. Thanks.